Hello traders, welcome to another tutorial on price action. And in this video I'm going to go over basically what I do, what I look for, the checklist that I have before as far as analyzing the markets and how I go about a trade. And so let's go over, and you can see them on the front of your screen. The first thing I do is I'm looking for daily ranges. So if I'm going to take, for example, a counter trend trade, typically at the end of a trading session like the London close or the New York close, or actually that's probably the only time I'd be taking a counter trend trade is when a session is over. Stochastics indicator, I'm looking for overbought and oversold stochastics, and the settings are 14, 7, and 3. MACD crossover. Candlestick patterns, very important. If you do know your candlestick patterns, inside bar, hammers, color change candle strategy, dojis, double bottoms, tweezer bottom, tweezer tops. There's several candlestick patterns that you must know like the back of your hand. It's very important because they do indicate a change in sentiment in the markets. Time of day, very important. Certain times of the day the market tend to retrace or reverse, typically from session to session. And news events. So when a new day starts, I'll go to the calendar of events and make sure that if there are any high impact news events, that I'll make sure I'm not in the market at that time. So I'm going to just go over a few trade setups, and what I'm looking for is at least 3 or 4 of what you see on this list. And so let's get started. Let's look at a trade on pound New Zealand dollar. My favorite pair, because the daily ranges can be anywhere from 120 pips to 235. So I'm going to make the screen a little smaller so I can show you what I'm looking for. Okay, now let's look at this trade setup here. We have market started at the beginning of the day. These are 24-hour sessions from perforated lines. These are 1-hour candles. So at the end of the day, I count the number of pips. Market goes up about 162 pips. And it's the end of the day. This is the London close. So I'm looking for confirmation. I'm looking for 2 or 3 reasons why I should take the trade. Well, if I look at stochastics indicator, it's not only overbought, but we also have divergence set up. And let me just show you what that looks like here. We have wave patterns on MACD slanted down, and price action at swing points is going up, hence divergence. So that's 2 reasons to take a trade. Okay. I also see there's a color change candle, so that's another reason. It is the London close, and the market has, done almost its daily range. Anywhere from 120 to 235 is the daily range on the pound New Zealand dollar. And I would love to see the crossover on MACD here, but MACD is lagging. So this doesn't really help me, because I could have waited to the 2 lines crossed, and that would have confirmed the market turning around and heading south, but I would have missed out on about 60 pips. So on this particular setup, I would have used the color change candle strategy and divergence on MACD. And notice that the market just turned around and put in about 180 pips. And look where it finally found support at a previous level. So this is a great trade setup. The market went up all day, and at around the London close, we start seeing candles that are smaller. We have color change candles, stochastic silver bought, and we have divergence. And the 2 lines of MACD crossed about 60 pips later. You could have waited till the lines crossed, But again, as I mentioned, you would have missed out about 60 pips and before if you would have taken the trade down here. Now the market sells off, and let's see how many pips market went up from the swing high to the swing low. 237. Definitely it's done its daily range from that swing high to the swing low. And stochastics is oversold. Okay, so we've got two reasons now. The market's oversold from the swing high to the swing low. It's put in about 237 pips. Stochastics is oversold, and price found support at a recent level of support. So right there. We also have a color change candle. So we're finding a lot of reasons why we should be taking this trade going in the opposite direction now. And finally, there is the last reason, a crossover in MACD. And this crossover happened about the time you would enter the trade after the color change candle. So a crossover in MACD, color change candle at a previous support level, stochastics oversold, and the market's put in about 220 pips from the swing high to the swing low. All right, let's move on. Okay. Let's look at this trade setup. Market, let's say it went up about 172 pips. So far it's done the lower ranges of its average daily range. But it's also hitting a previous resistance level. 1, 2, this is the third day. We get also a huge shadow, huge wick at a previous resistance. We have stochastics is overbought. And finally, and we do have a crossover in MACD. So you notice all these reasons will help you. More reasons you have to take a trade, the easier it is to take that trade, have confidence in that trade, and stay in that trade. Okay, so let's count the number of reasons why this trade worked out. We had a candlestick, a nice hammer, and it was bigger than the previous candle, so that worked out at a previous resistance level. Stochastics is overbought at a previous resistance level. We have a crossover on MACD lines, and also we have a color change candle. Okay. Now these strategies are on the 1 hour chart, and we're not looking at other time frames for confirmation at this time. I just want to show you that having 2, 3, 4 reasons to take a trade, and look at the outcome on this one, 313 pips. Now from the very top, that was over 421. Now here, again, we have a trade. The market's exceeded its range. At the top of the pound New Zealand, it's usually 235 pips. In this trade, from the swing high to the swing low, we have 415 pips, 413 pips. Then that's one reason why we should be looking to trade in the other direction. So we have stochastics oversold, and we also have a crossover on MACD. And so let's count the reasons. Number 1, oversold, exceeded its daily range. Number 2, stochastics oversold. Number 3, crossover in MACD. Now, one thing I should point out is when you find price hitting a previous resistance level, and if that, or support, and in this instance it's resistance, the more you see it bouncing off a previous support level, and on this instance it went back for over a week, I think. Let me just make this smaller. And let's just highlight these areas that the market found resistance. 1, 2, 3, okay? Unless you're looking at 5 or 6 days of activity, it's difficult to find these. You won't know where you should be looking to buy or sell. And if we look at this chart, step back, look at about 5 to 10 days of activity, and notice that when price hits a previous resistance level, look and see where stochastic is. Okay, now I'm highlighting stochastic's indicator where price is hitting a resistance level. Here, didn't quite get up to 80. That's the level of resistance I would have loved to have. Let me just make these levels bigger or wider so you can see them. I'll change the color there. Okay, so 80 is the level. Stochastics is an oscillator, so their settings are 1473. When it's hitting 80, you start to look for overbought conditions, and if it's down to 20, oversold. And if you have candlestick patterns that match overbought or oversold conditions, then you've got a very good chance of making some decent money on that trade. This was easy. We found several reasons of resistance. The market was just range bound for a whole week. And look how many times it hit this level of resistance at $2, which is, I would assume, a psychological level. And every time stochastics was overbought and price hit these levels, the market just turned around and went down the other way. It just reacted to these levels and retreated. And let's count how many times. This is the initial. This is the first time it hit that level before up here. So it's 1, 2, 3, 4, and then 5. And let's see if it hit it again later on. It did not. But this is how we trade. This is what we look for. We need confirmation. We need several reasons why we should be taking a trade. And you just count them. Here, previous resistance, that's 1. Number 2, stochastics is overbought. Number 3, we've got color change candles up at these levels. And the last one that we were analyzing was a false break or hammer at a previous resistance level. And the 2 lines of MACD are crossing to the downside. So we've got several, here's another one, several reasons to take a trade. And I guarantee you, if you do this, if you just look for overbought and oversold conditions and count the number of reasons why you should either buy it or sell, then what will happen is that you'll take the trade, you'll put a proper stop loss, and you walk away from your computer. Look how many hours each trade lasted. At least 5 or 6 hours per trade. So if you're used to taking trades and exiting immediately after you're out 10 or 20 pips, then what you need to do is practice this strategy and be able to stay in at least 2 or 3 hours, because on the pound New Zealand dollar, 2 or 3 hours can mean anywhere from 100 to 300 pips. So I'm going to count the number of pips if you would have taken these trades when they triggered. For example, here, 193 pips. Here, maybe you enter the trade down at this level, 63 pips. Here, 102 pips. Here, 156 pips. On this trade, 323. And then you would have reversed positions because stochastics oversold down at 20, and MACD crossover and stochastics oversold, stay in a few hours, 234. Okay, so to recap, when you are trading, just make sure you have a list of things that you look for. And in this particular scalping, I call it scalping anywhere from 50 to 100 pips, is really scalping. You're looking for essentially trying to capture as many pips as you can within a 24-hour period. And you're not holding positions overnight or multiple days. So make sure you know the daily ranges of each currency pair. On this particular pair, Pound New Zealand, anywhere from 120 to 235 pips is the daily range. Make sure the stochastics indicator is overbought or oversold, above 80 or below 20. MACD crossover, very important, and that confirms if the market is going to change and change direction, as it has here several times. Okay, there and here and here also. So when everything lines up, when you have stochastics overbought and two lines cross over our MACD or oversold, here stochastics oversold, and we have a crossover MACD, and we have a color change candle, and price is essentially done its daily range, you've got a very good chance of profiting. Candlestick patterns, know your candlesticks. That will really make a big difference. Knowledge is such an important thing when you're trading financial markets. The more knowledge you have, the better off you are. Time of day. Be very aware the time of day you're trading. So for example, here, this is the London close, with this red arrow. And we know that at the end of a trading day, the London close markets usually tend to reverse, or if not reverse, retrace. And this is what happened here. And news events. So when you are starting to trade, go to the calendar of events. I use Forex Factory. And make sure there are no high impact news events when you are trading. If they are, just wait for the news event is over, or use one of our news event strategies. So for those that are interested in taking your trading to the next level, we do offer educational programs. This is our website, FX Northwest Institute. We have a professional Forex trader program that is a 6-month program for $9.97, and there's a wealth of knowledge that includes videos, 24/7 support, email. We've got proprietary trading systems, daily chart analysis, Forex news event trading strategies. And so you can email me. Here's our contact information. So shoot me an email if you are interested in our programs. If you cannot afford a course, then we also do installments. So thanks for watching the video, and have a good New Year's.